Hi, this is Mohan Kumar from Brainy Bulls, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's look at the Nifty chart for April 27th, 2023. So let's quickly get into the charts. Great. So you're looking at the two-view chart in the TradingView platform. So you see the Nifty spot on the left and Nifty futures on the right, right? And both of these charts are set to a 3-minute time frame. Before I bring the indicators on, let's quickly see the price action for the day. So the market opened flat, no, at least on the spot chart, you could see that the market opened very close to the previous day's closing price. But on the futures chart, the market opened slightly lower, but not significantly lower. But as you could see, right? And since the market opened, the market swiftly moved to the upside, making higher lows. So this indicates a clear trend to the upside, a strong trend to the upside, and market closed higher, right? So such trending days are not very common. Like you would get to see only 2 or 3 days in a month. In the trending mode, either to the upside or downside. So today is one such days where the trend was to the upside. Okay. Now let's apply the custom indicators. So I have three indicators which have been built exclusively to be used on the Nifty 3-minute time frame charts. Right. So I'm going to bring them one by one. So just to I mentioned that these indicators are not available out of the box in the TradingView platform, or you may not be able to see such indicators in other platforms like Kite or Upstocks. So these are exclusively built using the Pine script code, right, to be used in the TradingView platform that is on the Nifty 3-minute time frame. Okay, so the first indicator is the price levels. It's going to actually plot all the important locations, right? It's going to plot the moving averages, and it's also going to plot the volume candles, right? And the settings and the parameters are completely customized, and they are optimized to work well on the 3-minute time frame. And based on multi years back testing, I've actually refined and fine tuned the locations indicator to work on with the best settings, right? And then the second indicator is the participation. Again, this is a custom indicator. It brings into a brings many factors, actually, and plots the dots. As you can see, there are three colored dots, which indicates different participation, right? The black, blue, and the green dots. So the more the number of dots you see, right, the more the participation is, and that's going to actually make the markets move quicker, right? Whether to the upside or the downside. We have the trend meter, which is going to now give us signals about how strong the trend is, right? So I'm a directional based trader. So we trade, Nifty options, and it's purely a naked buying strategy. So we need to be very clear about the direction, right? So I'm not a non-directional trader, and this strategy is purely a directional based strategy. And this trend is going to come in handy to confirm on how strong the trend is, right? Whether the trend is has peaked out and it's going to reverse from the top, to the downside, or if the trend is has bottomed out, and if the trend is going to reverse from the bottom to the upside, or if the trend is going to continue, is there any conflict of the trend with the price, and so on and so forth. So there are quite a few patterns, within the trend meter itself, which has to be read, along with the price action patterns for us to confirm on the signals, right? So these are all the important facts that we discuss in a very structured and organized way in the webinar. But in the chart analysis, it's not going to be a structured, discussion. So because we're going to discuss on that particular day's price action based moves, so it's going to be in bits and pieces, and hence you might not be able to connect the dots quite well. But rather, what you would see out of these, charts is like how simple and straightforward it is to use these, indicators and read the signals and take trades and exit out of a particular trade, right? That's what we're going to look at in these series of Nifty chart analysis. Okay, so we brought the indicators on both of these charts. Now these indicators, though they are the concept is same, the parameters and the settings are quite different. As you can see, the trend indicator on this particular chart is not the same as on the futures chart, right? They work on completely different parameters and settings, and they give us a total different, perspective, about the market and the trend and everything. And similar to the trend, the market participation as well is completely, set to different settings on both of these charts. As you can see, these charts do not appear the same way as it appears on the other chart, right? They're all completely worked to, optimized to work in a way that there is some kind of similarities and commonalities based on which we take trades. Okay, so that's the beauty of this strategy. It's a very unique and a powerful strategy. It's a high performing strategy. So let's quickly look at the price action, right? So the market opened almost close to the previous day's high, and by the looks of the EMA, you know that the trend is quite strong to the upside. All three moving averages are wide apart, and you could see that now they're all moving to the upside. And the price is right above the central pivot range. And as you can see on the futures chart, the price opened right at the central pivot range, the CPR, the orange line, and it swiftly moved higher. And it was so strong enough to break the previous day's high. And so we don't trade breakouts. Look at the trend meter; it's almost near the red zone. So we don't take trades near the red zone. Whenever there is a breakout, so we always wait for the price to retrace back, right, to the location where it had a breakout. And also we look at the trend meter, right? The trend meter is almost close to the midway or below. That is when we usually take trades. And we also look at the participation, and just to have some room for the price to play. So if you get into a trade so close to the red zone, right, and if you're going long, then it might actually go into the overbought territory and it might reverse. So you might not have enough reward. Hence, you always wait for the trend meter to come to as close as to the midway, at least the midway, right? The more lower, the more better when you're on a long position. More the higher, the more better it is when you're going on a short position. So in this case, the trend is moving to the upside as indicated by the moving averages. We are on a nice uptrend. It broke the previous day high. So it's a major location. If the price retraces back, right, and if there is a huge participation with the trend meter being at the right area, this is where we actually look for taking entering into a long trade, like buying the Nifty call at the money option, right? As you could see, the price swiftly moved above. It's kind of actually showing some kinds of consolidation. There was not much of a participation on this side of the chart, even though there is some here. And as you could see, the price as it moved, right, there was a lot of participation and the price swiftly fell to the previous day high. And there's quite a bit of a participation in this area. There's quite a bit of participation in this area as well, as you could see. There's not much of a participation since morning, but suddenly the dots appeared and confirming that there are a lot of players entering the market at this key location, which is the most important fact. So participants entering at a major location when the trend meter indicates that there is a conflict. As you can see, the low point on the chart is this, right, from the morning, and this is the point. But look at the trend meter. The trend meter rather made a lower low, right, on both these charts. That indicates the trend to the downside is quite weak, and because there is a price trend conflict. So these are all the signals which are to be read in conjunction with the price action patterns, the participation, and the location. And look at the candle pattern. There is a nice bullish candle that's coming right off of the major location with a lot of volume. So this is the candle that we put our money on, and this is the low, and we take trades based on this particular fact. So as the price moves higher, we actually hold on to the trade until it actually goes close to the red zone, as close to the red zone. And if there is a kind of a resistance, in this case, the daily pivot, look at the candle pattern, look at the trend meter. Even though this has not reached, this has reached. So it's okay. We book up profits. We don't take chances. When the price is at a location, when the trend meter is actually very close to the red zone, we take our profits and maybe we re-enter the trade again, based on the same conditions like location, participation, and the trend meter. Okay, so the first trade was, it's in fact no, not a great move. Before we even entered, we know for a fact that this is the target because of the red line, as you could see, is the daily pivot, right? So this is how you read signals. This was the first trade of the day, right? And it was a very decent move, though, right? And so we observe the price action. We do not get into a short trade because of the fact that the trend is moving higher and it's making a higher low. In this case, even the trend made a higher high, right? So as you could see, the price started to consolidate, right? While it was consolidating, look at the trend meter, right? The price was actually not making lower lows, but the trend meter was quickly moving to the downside. Again, the same case as here. while the price was not making bigger moves to the low, the trend meter was moving lower, right? And same is the case here. As it was consolidating, look at the two low points here during the consolidation. The moving average was moving higher, right? The black moving average, the bigger time frame one, but the trend meter was moving lower, just as in the case of the previous, move in the morning. And but the low points are like either, it was the same low point or a slightly higher. So this clearly indicates, that the move to the down is very weak and the uptrend is too strong. And so we look for the candle patterns. We look for a proper entry point. In this case, look at this lot of participation, and when the price came back to the same location, right to this particular green, right. We did not take the trade here because now the trend meter was little, above the midpoint. So we were looking for better opportunities. So as you could see, when the price came back to the same low point here, it made a bullish candle right here. And looking at this candle pattern and the trend meter, this is the right place because we have enough room for the trend meter to play and move to get maximum rewards out of the trade. So we take the second trade right here, right above this candle, and stop loss being this low of this candle, and a nice move to the upside. And today being the expiry, right, weekly expiry, and if you would have taken at the money or slightly in the money option, right, you would have made a decent profit. I would say a better reward, considering the risk that is involved in every single trade that we take. We always risk one candle, but the reward is multifold. As you could see in this case, we actually take profits when the price is at the red zone. So we would have exited out of the trade right here. If you are slightly an aggressive trader, you would have trailed your stop loss to the green moving average, and you would have exited the trade right here. Okay, so two beautiful places to take profits, first target and the second target. So if you're trading multi lots, you would take 50% of the lots right here. You trail your stop loss to the green moving average and take profits on the remaining lots at this point. Okay, so you know for a fact that the trend has been moving higher and higher since the morning, since the open, right? And you would again wait for the price to retrace quickly. Would you take a short position here? Not really, because you do not know if the price is going to stall at the green moving average or the blue moving average, looking at how strong the trend to the upside is. So you always wait for the price action to confirm. So when the price moved swiftly back into the moving averages, as you could see there, whenever there is a breakout of a particular location, if the price retraces back to the same and makes a candle pattern with a participation, right? Look at the trend meter, nicely back again, right? Look at the price action, it made a higher low. Look at the trend meter, it's almost flat, right? So that's exactly how you identify trends, based on the location, based on the price action, based on the participation. And this candle right here, the pin candle with a lot of participation on both of these charts, is another better place for you to actually put your money on. So you go right above this candle, take the low of this candle as a stop loss, and nice quick move to the upside. Okay, again, two targets. You would either trail your stop loss, right? You square off 50% here, and you actually, trail using the trail stop loss method. You would actually, ride along this trend and close only when, this gets into the red zone, which is right here. So three beautiful rates for the day, right? This first one being a small one, second one being much bigger, and third one being even better, right? So three great trades as indicated by the strategy. So we always trade based on facts, based on the signals given to us by the strategy, right? Which is again, these three indicators form the core part of the strategy. It's not just the indicators, it's the trade management, risk management, and money management all put together, right? And the concepts of price action patterns and candlestick patterns play a very important role. So we always do pre-checks before the market opens, right? Where we bring in the previous day, major turning points. We also bring in the resistance support points from the past, right? So all that we do, and based on how the price action, for the current day, right? So between 9:15 and 9:45 to 10, it is then we decide on which direction to go and put our money into, right? So like I mentioned earlier, this strategy is a directional based strategy. Hence, we need to be very clear about which direction we are putting our money on, or betting on, right? So it's a game of probability. So you only get into hype probability trades. You go full on, like full lot size, and then you actually trade. And if a particular trade is not high probability, then setup, then you would actually go with a reduced lot size. But still, again, you would take your chances. So these are all important facts and points that we discussed in the webinar. Like I said, no, we discussed a lot in this 10-15 minutes of video, but no, the webinar is going to cover a lot more facts. It's going to be very structured because we get into price action patterns. We complete the entire price action, the topic on price action before we move on to the candlestick pattern, right? So when we get into the candlestick pattern, we now also bring the price action into perspective and talk about the candlestick pattern in conjunction with the price action, right? So when we move on to the other topics, like these indicators, we now have everything in perspective: the price action, candlestick, and in conjunction alongside to these concepts, how these indicators will have to be used effectively to read the signals. So once you have a clear vision about, or clear knowledge about all these underlying concepts, right, you will now be able to see things very clearly. The other fact is you got to be training your brain to see the patterns as it appears on the chart. Now that's where the entire skill lies on. And you get, along with the strategy, along with the scores, right, you get all these custom indicators free of charge with lifetime access. You get 90 days of charts with all entries and exits marked clearly for your reference. And with all these video recordings, the Nifty chart analysis video recordings, right, you will have a lot of questions answered, a lot of doubts clarified, and you will be able to see all the patterns very clearly and train your brain to see the signals and trade based on these signals. So every single day, as you've been seeing in the series of videos I've been posting since last a week or so, every single day you get to take at least 2 or 3 trades, and the risk to reward is great. You would not get into a loss making trade unless you go against the strategy, right? Hence your focus is very much the key, and your discipline is the most important factor. And your emotions, how you manage emotions, is another bigger topic. It comes out of experience. But at the same time, if you're going to stick to the plan, and if you're going to do according to what the strategy says, like exiting at the right and not any time before, is very important for you to actually get the most out of every single trade you take. Like for example, in this particular trade, if your strategy says hold on until the price moves into the red zone, you wait until the price moves into the red zone before you book your profits, right? And if your strategy confirms that the price will have to be in a major location, right, if not, you can trail your stop loss. You do the same, you trail your stop loss to the green moving average, because the price is not at any location for the price to make a reversal from this point, right? Having said that, you will always have to trade with a particular risk uh, in mind. So you always actually trail your stop losses to the green moving average, and then wait for any kind of moves to the upside. And this exactly is the place where you would take your profits. You would close out your entire position, because it is a major daily resistance here, right? So it's a wonderful strategy. It's tailored to fit your trading experience. So it's going to be a one-to-one private session, right? Hence, it's going to be very productive. If you're interested to know more about this strategy and get started with trading, please don't hesitate to contact me. It's a wonderful way to actually get started by learning through an experienced mentor. So it's been like over 10 years I've been watching the market, and I've been only looking at the Nifty and Bank Nifty for the last 10 years, playing with a lot of indicators and strategy. And this version is the most optimized version of everything that I have used so far. So this strategy is the mother of all strategies that I have formulated. So it's really going to it's going to be an eye opener. It's going to give you great insights into the market, right? And so please don't hesitate to call me to know more about this course. If you haven't looked at any of my previous videos where I talk about the list of topics in course, please do have a look at those as well. So until I get back to you with another episode of Nifty Chart Analysis, it was nice talking, and take care of you and your loved ones. All right. Thanks a lot. Bye bye.